All right, welcome everybody. This is the first of many weekly webinars here with Sang Lucci and Market Inflections. What we want to do through these particular webinars is just show trades that have set up well that we've taken and just show how they set up, and then also just talk about trades that we are looking to make down the line here, short term, long term as well. And all different kinds of options trades too. We do straddles, credit spreads, just long, straight, long, naked. I know Alex here, you dabble in just long stocks and selling calls against, correct?
I mean, that's my go-to. I'm not much of a shorter. Yeah.
Right. Right. I love shorting options. These guys all know. Anybody who's been around a Sang Lucci webinar here or there, I love shorting options. It can get a little dicey, of course, if you're shorting naked.
Right.
You know, but we'll talk about some of these risk metrics as well. So just to intro myself, if you guys haven't been around the Sang Lucci World Market Inflections, my name is Anand. I was head trader at Sang Lucci. Been educating folks like you guys for quite some time now, and we met Alex and his partner Larry Footer, and we just love this software, and we love the fact that it works so well into what we were already doing, and we're going to show you a couple examples of that today, as well as future trades that we're planning to make here. So we're trying to conjoin everything here, all the science that we're creating, into more edge and just better trades for you guys and for all of us, basically. So, Alex, why don't you give them a little intro here, and then maybe we'll try to start to get to know some of you guys. While Alex is talking here, why don't you guys go ahead and give us a little description here of how you trade, what you've been trading, how long you've been trading, you know, what you kind of use for technology right now, if anything. And Alex, man, take it away. Give them a little intro.
Yeah, a little intro about me. I mean, I started as a prop trader as well, and then eventually migrated to be more independent and actually kind of on the research side. And you know, one of the things that kind of caught me probably 4 or 5 years ago was basically a lot of the tools I was using that were out there, commercially available and institutionally available. You know, they were interesting, they seemed to work, but I didn't have any proof, at least in the data or in anything that I could tangibly see or analyze that something had an edge. You know what I mean? There would be edges that we would find, but they wouldn't last very long. And so what I thought was very useful was to take trading from a little bit different approach, and rather than just data mining the universe for signals, let's try to approach it from a scientific perspective first off, and then see if we can produce an edge in that way. So working with Parallax Financial Research, who's kind of the mothership of this technology and a lot of other things, been able to build quite a useful arsenal of strategies and models around a lot of the backbones that you guys see here on the charts.
Right, right, and you know, just to give you guys a synopsis of my understanding of the science behind it, guys. My understanding of the actual science behind these signals is not even close to where Alex's is, and I don't even intend to get that deep into the situation. You know, what I'm doing here is just cross-referencing, you know, the signals, giving me an idea, and then helping me out with my timing. That's one of the most important things in trading, as you guys all know, in options, equities, whatever the hell it is you're doing. Without that timing here, you know, you're going to be shooting in the dark. You're going to be shooting blanks out here. So we're going to go ahead and just show you guys a bunch of examples here of trades that we made. We're going to start here with the Bank of America, which was last week, towards the end of last week. And as you guys know, markets, you know, markets were in sort of a free fall. And you know, even this morning, actually, we gapped down 20 handles, which was extremely interesting. I honestly thought we were going to continue, and then we really started to see a lot of the information as far as the flow and as far as signals, you know, just kind of set it up for a rally into the end of the day. But last week had a lot of selling in the banks. Finally, so if you take a look at names like Goldman Sachs and Bank of America, and what you guys are looking at right now is a trade station set up with different time frames. So you're going to get these signals. Basically, we're getting these signals on every single one of these time frames. And we're focusing more on the daily time frames, 130-minute, 60-minute, 15-minute. for different types of trades. And what we do is we push out some of these trades here, whether they be day trades or they might be, trades where you're going to hold for 5 days. They might be trades that you're going to hold for a couple of months. And we're pushing all these signals out there, and we're kind of curating the best ones that are out there. So again, if you notice, most of the banks here just really took a beating. And the Bank of America signal that we pushed out was a bottom signal here on the daily time frame, as well as a lot of other time frames. It came in around like 2260, 2280, and the stock opened down there. And I'll tell you what else happened. We picked up a lot of flow on this too. We picked up a considerable amount of flow on this. So if let me go ahead and pull up.
What kind of flow was getting hit right on that signal? It's always interesting to me.
Yeah, yeah. So a couple of days ago, and this is basically when all of it started happening. Like we just saw dip buying immediately, literally dip buying immediately coming in 2280 and places like that. They came back for the Aprils, and you'll notice like right here, this is where the day happened. So this was exactly when we had the gap down. And we saw all these April buyers come in, dip buying 25s, Mays, and then they started, you started to see a little smaller size here, but just everybody was just loving that dip, and then the next day and so on and so forth. Next day they went after a strike, a higher here, even for the weeklies. Stock was trading around 23. It ended up going to around 23.5. So this was a really good trade, and I pushed it out for a weekly. So we'll even do signals for weekly options trades as well. I know you guys, some of you guys get pretty aggressive out here. I get it. Some of you guys will get a little too aggressive in the weeklies. But we will push those out as well if things line up pretty well. So we were able to take the trade at around 22.70, and we got rid of it around 23.25, 23.30. There was a little bit more upside. You notice you got all the way up to about 23.5, and this paid out almost double there on the options. So very sweet trade within a very short period of time. So we're just kind of looking for trades like this, and we're looking for these extreme kind of situations where we can rip some solid percentage points and we can actually find an edge. Now, Alex, a lot of people will start the shit talking, right? They're like, well, why didn't you catch this move? Well, why didn't you catch the 2-point move down? Well, why don't you? You know what I mean? And why didn't you catch that move?
Yeah, there's so many Monday morning quarterbacks. It's pretty ridiculous, But as traders, we have limited capital, right? I mean, I got stuff on. I had stuff on before it was going down. So you have to be very selective, I think, in what you're doing here, because it's kind of got to fit a higher narrative, right? I mean,
yes. Absolutely. And and even the pullbacks that we've seen across the board, there was another trade that I was making in Amazon here, and again, like I sell a lot of spreads, and when I start to see weakness, I'll come in on the call side a little bit. Again, we want to look for edge. We want to look for places where we know we're going to be able to come into an option and get some momentum. I mean, guys, if you don't have any momentum behind you, all you're going to see is that decay, is that horrific decay, and that all happens with the timing. So what we're doing here is we're basically conjoining these signals with the flow, and with a little bit of a market expertise here, and then pushing out these trades for you. Okay, let's throw out another one here that I know Alex has been all over, and I'll let Alex quarterback this one. Talk to them a little bit about Coach.
So personally, just because my trading style is a little bit higher time frame, I'm kind of looking at bigger signals that I don't have to jump into all at one time. I can kind of let them evolve a bit and use the lower time frames as what I call kind of surgical signals to help me really pull the trigger at the right time. So what I was seeing here is that on the daily time frame, you have these compression signals on that top third from the left graph, and that tells me that Coach is going to start to move here. It's going to stop going sideways. That's really all it says. We're looking for a breakout. We're looking for this to start to trend. So, being an option player, I don't want to use my capital and just let it die day after day unless I know something has a good chance of it starting to move, starting to go one way, higher or lower, right? So
Right.
then it's just up to me to really engage in the price action and pull the trigger, you know?
Right.
So, you know, and what I find is a lot of these stocks that have cratered, you know, and it's basically the dust is settling, there could be some really great swing moves in here because you got people covering shorts, you got bottom fishers coming in, you know, there's just a lot of participants playing both ways that we
Yeah.
can find a good edge there. So I showed you guys this in the webinar last week, and I thought it was just an interesting kind of play to
Right.
try to make it to the upside.
Right. Now, can you throw out to them like what you know, what was the ideal trade for that one, or what trade did you personally throw on for that one?
So right, this trade is basically just long stock for a
It's
lot
long
of
stock.
these.
Okay.
Yeah, a lot of these bigger weekly, daily
Yep.
signals. I'm basically operating a condensed or a concentrated stock portfolio. Now, I will sell calls against my positions sometimes,
Right.
but really
Right.
the constraints of this particular strategy is to use this cash markets. Now, one of the
Right.
positions I was looking at for a potential call spread is JetBlue, and I think
JetBlue.
I showed you that earlier today.
Yeah, we talked about that. Yeah, we talked about that today. So let's bring that up a little bit later, guys.
Well, look at
For
this.
Coach,
Just a note. Yeah,
last
yeah. Look at. Yeah.
last week we saw April 41s come in. Again, like Coach, you're not going to see hundreds of thousands of dollars in this thing, you know, but there was definitely some interest here on Coach here for the last month, and we've all been trading this thing in and out. And you know, once Alex threw out that signal there, you know, it just gives you a little bit more edge, and that's all we're throwing out there. That's all we're throwing out there. We want to get an extra 10, 20, 30% of edge here, so that when we make a trade and try to time these things, you know, we're not always shooting in the dark here. Let me throw one other example. Alex said something very interesting about some of these stocks that have really just been hammered, and somehow, you know, sometimes they'll compress a lot, and then finally just give you these monster signals. I destroyed this Mosaic and this CF, and these are agriculture stocks that you know, that basically just been getting shit housed. And guys, you remember United States Steel? You remember United States Steel? I think the signal might have disappeared on this one, maybe. Okay, so maybe not here on this one. I think we had this issue last time. Let me
It's
try
because
again.
the memory is we
Yeah,
limit
it
the
was
memory
right
for
here.
speed.
Yeah,
Yeah.
it was right here. It was right here after this ramp up. We had a monster signal here, and I destroyed this thing for 5 points here, you know, on a front month option here, and then I did the same thing with Mosaic and Potash. But those were perfect examples of compressions that really worked out. I want to throw one more out there before we start taking some suggestions for you guys. We'll talk
But
some
that's a good
names.
example because, you know, another
Yeah.
thing that just through experience, when groups like that all start to move together, it
Yes.
kind of tells you a bigger signal's happening.
Yep.
Usually, in my experience, when you get like 3 stocks or 5 stocks in a group that are all signaling in a very similar way, usually that ETF that holds it is also getting a ton of flow, either a lot of buying or selling, and so
Right.
it's all that same flow going into those top weighted stocks, and
Right.
usually when they burst, they usually can go all together. So that's been
Right.
an interesting
So,
way to look
you
at
know,
these.
one other thing that I want to throw out there that I've learned myself with some of these big compressions is that I mean, again, like you guys see consolidation. You guys see charts that are consolidating all the freaking time, right? Now, what is the problem with most of us during consolidation, right? What do we either do? We take a biased approach to looking at consolidation. Okay, so that means we're going to be one-sided going into this thing and just looking at these things. And oftentimes, before you get that really big breakout or breakdown that you've been looking for, there's all kinds of shakeouts. There's just shakeouts everywhere. And they'll go past levels that you're looking at, and they'll destroy your options prices completely. So one of the things that I'm finding is the best way to utilize some of these compression signals is playing these freaking straddles, man. It's just playing the damn straddle, getting enough time, and just letting them go, and literally just letting them go. You can sell against some of these things to, to cut down your cost a little bit. But I want to throw out a trade that I actually just sent an alert out for today. Today I just sent an alert out to straddle Microsoft here. And if you guys take a look at Microsoft, this thing has been doing nothing for such a long time. For such a long time. And now, finally, what we're also seeing is we're seeing a good amount of flow start to come into Microsoft. We're starting to see them hit the May 65s. So we're starting to see a lot of activity in Microsoft. Some of the tech names are holding up really well. If you take a look at Netflix, some of these other names, some of these other big tech names are holding up pretty well. And this Microsoft, through the whole downturn here, is still holding 65 pretty well. There's a couple different ways you can play this. I'm going to let Alex go ahead and toss it out there, too, on some better ways to play some of these compressions. Another way to do it is to wait until these things break out and then look for a good entry and go further on. I know, Alex, you look at compressions way after the move has already started, basically.
Yeah, I mean, one of the things that will be very nice to utilize in the future is the understanding of how long these signals actually last.
Right.
They've been built in a way that they're not just 1-2 bar ponies. Like, these things can really run for quite some time. That's probably one of the main reasons I focus a little bit on the higher time frame. And so what's nice is when you get a really strong, clean compression breakout, what I tell people who first start looking at these signals is you don't have to jump in on the first bar after a compression signal. That's really not what it's meant to do. You know, just by experience looking at these things, they're going to last many, many bars. So use your other skills to really pinpoint a spot. My favorite way to play compressions personally is to let it show me which way it wants to go and buy the first pullback. Now, how you do that is, you have to use a different set of tools, or you just kind of have to eyeball it. But buying the first pullback after compression break is literally one of my favorite plays.
Right, and folks, this is basically what we do for you. Like, this is what we are doing for you through this part, through not only this software here, but through the Signal service. So we're doing all of this for you. We are curating all of this for you and figuring out what the best move is and where we can get the most edge and what the right options trade is. So not only are you going to get the signal here, but you're going to get the right strategy for that particular signal. Whether you trade equities, whether you trade options, whether you're allowed to short some credit spreads. And by the way, how many of you guys are able to short options? How many of you guys are able to short options? We're getting a bunch of questions here. Let's go for another 20 minutes or so. We'll start taking some questions here. But go ahead and hit me. How many of you guys actually can short options, and do you often do this? I will tell you right now, and what you're going to see very often through these webinars is one of my best trades, and I'll tell you what I did today too. And again, I didn't push the signal out here because we're not doing a lot of short options yet because we don't know if you guys are able to do this. But this is good. This is good feedback that I have now here. I went ahead and shorted some put spreads here on Goldman Sachs. I shorted the 215 weeklies as well as the April monthlies for 215s, and they were going for a lot of premium because of the gap down today, and we got a nice little we got a nice little extension signal all over the place here, and this was just a really nice place to sell some options. Because once you get that snapback, those options get decimated because the volatility is so high right here that as long as, and again, you might be there too early. Alex is going to speak about that too, and that was the same mention before. You're going to get signals here, and you might be in too early, and that's why sometimes you want to wait for these things. Alex will speak on it in a minute. But once you get these, these big extensions here, that volatility, that premium is so much there that if you have a little bit of an edge and prices are going to just calm down a little bit, or at least you have a little bit of an indication, that is the case, we don't have to rebound completely. All we got to do is just chill out a little bit and I can go ahead and collect all that premium here. So that is going to be one of my favorite trades with this software, and you'll see me doing it a lot. So you will see me sending a lot of signals to short options, short put spreads, call spreads when I see stuff like this, and I love this stuff, and it works really well for me. So Alex, why don't you go ahead and hit them, with that too early to bed kind of thing.
Yeah, I mean, it's going to signal when when the price action is at an extreme point, when it thinks that the move that it's currently in should stop, if not immediately, but very, very soon. You could see that the first one, it ran right over it there on the daily, but then it re-signaled here. So, you know what I mean? It's a big move, but I could tell you, just looking at what the pattern is here, that implied volatility is probably pretty high.
It's very high, yes.
So if you're going to sell put spread or even sell puts, you don't even need price to go up that much, you know, for volatility to come in. This can actually just go sideways, maybe stay, you know, between 230 and 225 for the next 10 days, and you've probably seen that full, you know, full juice get squeezed out of that trade.
Yep. And look what happened today, guys, too. So now we got Goldman Sachs weeklies. They're playing weeklies here for 225s. That's when this thing, you know, hit the low here at around 930, and the stock got up to about 226 and change. These weeklies almost doubled. These weeklies almost doubled right here. So, you know, there's several different ways to come in here and trade this stuff. The point is like, where's the edge? You know what I mean? We only want to trade where we have some freaking edge, man. How many of you guys overtrade your asses off? How many of you guys and if everybody doesn't put up their hands, you know, I'm gonna start kicking people out of here. Like, I know you guys do this because I do this. And Alex,
let me ask another question.
Sure.
Would you rather have a signal that was late or early?
There you go. There you go. That's a good question.
Exactly. Would you rather have something that is predicting into the future, or it's telling you of what happened in the past?
There you go.
You know what I mean? I think one of the biggest things that I had a problem with most of the tools out there, and I'll quote a good friend of mine, is most technical tools can be likened to driving down the road by only using your rear view mirror. You know what I mean? It's very difficult, and you're not going to know what's ahead of you if you're just looking behind you. So that's really the deciphering thing here, is we're using predictive signals that will be early sometimes. They'll be smack dab on a lot of times. But they also give us an expectation specifically about what should happen in the future. Like we know right now, Goldman Sachs, Bank of America, we are expecting a reversal to the upside, right?
Yep. Absolutely, absolutely, and we're seeing it from multiple different places. That again, it's much more advanced than you know, these other indicators. You know, so now we're seeing smart money guys come in here and bet stacks here on a bottom in everything here. XLF, you know, you name it, GS, you know, the whole nine. They're throwing out money out here, making real bets. On top of that, you know, we're showing you guys some extreme kind of situations here. This gives us a lot more edge. This gives us a lot more edge as far as timing, as far as when we want to put that risk out there, okay? And this is what we want to give to you, and this is what we are giving to you. All right, so let's wrap it up here with a couple more trades here, you know, a couple things here that we're looking at to...
show me the JetBlue. JetBlue is a really nice setup here.
Okay, let's go with the JetBlue here. So we got...
this has kind of been something we've been looking at least over here on my side, is the airlines. We caught a really nice move in Southwest earlier this year that we were out of, and we think that there's still a theme here. We see some flow, you know, from day to day. Obviously, with oil prices sustaining, being low, it really benefits cruise lines and cruise ships and airlines. So we're looking for players to come in here. Now, that chart you have right there, this is kind of the key thing that we're looking at. And if you just were to see this from first time, it's kind of like hieroglyphics. You don't know what's going on, but you could see the fuchsia or pink bar in February. That's telling us that price should at least stop going down, first of all, or it's going to start to reverse. Now, it went sideways, which is actually what the prediction was, and it made this consolidation. Now, any bar from that fuchsia signal till today, it had no inflection point. It had no initiation that it's going to start moving. Only after the last 3 days here with those blue bars is that
Right.
signal really happening. So we know, and we have also these support and resistance levels drawn for us. We don't have to guess on where a breakout point is. That if it
Right.
really ramps over 2060, that's a signal
Right.
to us. You know what I mean? There's so much of this process that
Right.
is created objectively that all we have to do is really understand what's going on for us to give a good signal here. So this is actually one of my kind of top plays here other than coach on the
Cool.
docket.
Cool. Cool, very cool. So guys, take that with you. I mean, we're scoping JetBlue, and of course, you know, when you guys join us, like we're also tying it in with Flow here. So if all of a sudden JetBlue or any of the other airlines here, you know, start to pull some action, you know, this is something that we can use to add to our overall, you know, aggressiveness on those particular trades. And then we'll go ahead and figure out, like, okay, you know, should we all be making some trades on it? So again, this is what we're trying to bring to you very simply in the form of just email and Twitter signals for now. Again, we are working on further automation, and we're working on a lot of cool things for you. You know, and these will be all available to you as we create and as we grow them. So let's take some questions here. What do you guys got for me? There's tons of questions here. John Doe was saying, Lucci, what about some long-term plays? So, well, this is great that you asked that, because Alex Bernal here
That's kind of my specialty, longer-term plays. If you flip one of those charts to weekly, I can give a few things. The reason I really like these weeklies is because they take a lot of time to build up. You know, you're looking at sometimes a half a year or a few quarters, you know, of time where a stock is really going through this behavior. It needs to have this signal, right? So those signals also, they take time to initiate. Once they start, you know, out of the hole, they might not explode 10% in the first week or couple weeks. It needs time to pick up momentum, which is nice for my style of trading, because I'll buy a little more, you know, I'll let it pull back, and I'll build a position in something, and then it also gives me more time to look at the landscape of the whole market. I struggle just trading day to day. I think it's difficult to know, you know, what the bias should be. But if you have, like, you know, 3 or 4 days or even a couple weeks of market behavior, like, you know, we had earlier this year, it was just buy anything. You know what I mean? So what does that mean, buy anything? Well, drilling down to these signals that are going to break out is what I was buying. So one of the, I guess you want me to take control here. I'll just.
Yeah, you have the thing, so I think you can just pull it. I'm pretty sure. And guys, by the way, Alex, why don't you hit them with the time frames that these signals last for, too? So let's just give them a little taste of that. So the daily signals will last about a month. The weekly signals, which is a much longer time frame than your daily here, will last you, what, 3 months maybe?
Yeah, so there's actually a way more scientific way to estimate how long they're going to last, but essentially the rule of thumb is 30 bars, so we don't even care about time, from the signal. So if we're on a 1 minute chart, then 30 minutes from that signal. If we're on a weekly chart, it's 30 months from that signal. So you can see why the higher time frame is a little bit more advantageous for longer term players, because I can hold something, hopefully 30 months, you know, get the tax benefit if it happens, and I can kind of really lean on a position. Like, what I like to do is build a position, sell calls against if I get to a good enough profit, take the calls off if it comes back, buy even more. You know what I mean? I kind of like to play in and out around a core. So that's kind of one of the things that I look at long-term signals.
Cool.
Did you want to just show my screen or no?
I don't know. I tried to send it over.
I don't have control. It's kind of weird.
Yeah, no, don't worry about it. Well, we'll go to that one on the next one. Let's take some other questions here. Randy Chima is saying, please look at a chart of Halliburton. Halliburton is a driller, I believe. Is it a driller? I don't know. We have been watching the oil names. You know, there's oil does have some bottoming signals, but oil is also a very difficult sector to trade right now. All oil stocks are very crappy. I have been waiting for a bounce in XOM and CVX for the longest freaking time now, and nothing is happening yet. So, again, some of these things take a little while to manifest here. Alex, you want to walk them through Halliburton?
Yeah, I'm looking at Halliburton on my machine. I don't see much in Halliburton. If you right-click and change one of these time frames to weekly, there's a really good signal that I posted in Oxy, OXY.
Okay. Which just go to format symbol?
Yeah, format symbol, and then you'll see there's a flip it to weekly, and that's the way to go. And you could see where the experience comes in, where if you get a weekly or daily signal, then you can really drill down with these smaller time frames and really get in at the right time. You don't have to waste any theta burn on anything. So yeah, you can see there's not much going on here in Halliburton. It's not to say that there might not be a signal soon. If you flip this over to OXY, there was a really great setup here. Because I've been watching energy. I think there was the initial dead cat bounce, and then when the build inventories were just insanely high, you could see that there was going to be another catalyst to the downside. So that middle graph there, I had a bias, you know what I mean? The oil count came in. Now what am I going to do? I need to get in this somehow. So I want to get in a stock that has a new trend that's going to start very soon, and that was in this Oxy play. So this is still going down. I don't really have a target on it, but I think some of these bigger names who are borrowing massive amounts of debts to sustain the dividend are going to start to feel the pain at some point.
Indeed. We got a lot of questions about where to subscribe. I will go ahead and send a link very shortly. Stephen Corey is saying, for example, instead of buying calls on CL and USO, should you be selling puts? Very interesting question here. I'll throw that back to Alex, man. What has been your experience here? Personally, you got to put it into context. We had it in that first webinar. You got to put it all into context.
For example, one of my favorite plays in oil right now is essentially long some of these really beaten down, what I call value names like Rig, Transocean, Marathon, even Atwood, some of these companies where they're basically at zero. If they go any lower, they're out of business. So there's not a lot of downside being long maybe a group of these, but then I also like being kind of perpetually short the USO because of the roll decay. So that's kind of the thing is for this specific setup, I think there's kind of layers inside this, and taking advantage of those ETF inefficiencies is something that has been free money for maybe 10 years now in some of these ETFs, and who knows how long it's going to stay there. But for those people that are unaware, every time they have to roll the futures in the oil ETF, they're losing money within the fund because of the roll decay. So that helps actually downside on that spread. So the signal here on the weekly was a few weeks ago when it broke down USO 1150. Now, I'll be honest, I actually thought it was going up, and I think maybe a lot of you guys did too. I mean, I was caught up in the sentiment at the time that oil was going to go back to $55, $60 and all the rigs would turn back on. But here you go. The non-directional compression signal right there was kind of the play.
Indeed. All right, we got one more stock here. We'll pull up here. Obviously, Tesla has been huge lately. Recent bounce here has been monstrous. There was a bottom signal on Tesla at around 245, and this was when the thing was just getting wasted from that top it hit at like 280 or whatever. And I'm gonna try to find this thing. I think it might have hit on the daily. It was right here. So look at this one, right? This 195 here, and you got this immediate. I love stuff like this. When you get really extended move, and you got to get shorts to cover, you're gonna get something. You're gonna get something here. So this was really juicy. And now all of a sudden this thing started to move back already. There was a gap here from like 275 or so. I don't think I'm picking much up on it now. As far as to make a trade here, I don't know. I don't know if
this. Well, look, on the 1 minute, 3 minutes, kind of done. It's telling
Yeah.
you intraday
Yeah.
it's done. If you
Yeah.
actually blow up this 3-minute chart, this is an example of something that I personally look for over
Sure.
and over and over again. You get a nice uptrend. You don't have to guess which way the market's going. It's already
Right.
going up. You know what I mean? Then you get a compression signal. So it's just reloaded for something that you can kind of assume it's going to keep going higher, just from your own personal bias, whatever you're
I
looking
see.
at, right? And
Yeah.
if you zoom in a little bit, you could see it made a nice little move up, and then it pulled back. See if you
Yeah.
can zoom this in a bit.
Yeah.
This is something that is really,
Yeah. Right here.
see that, how the pullback?
Yep.
That's my favorite spot to enter. Because I already
Okay.
know it's trying to go up.
Right.
I already saw that there's people buying it. And usually if you are watching flow or volume, that dip right there is really the spot to go.
Yeah.
So that's something that we'll be looking for and we scan for in these signals for you guys all the time, is these kind of key setups where, they don't happen every day, they don't happen over and over again, but when they happen, these are the ones that are really cherry that we all lean on and have built a really nice
Indeed. And this is part of the experience that we're also bringing to the table too. So not only do we have these signals, it's the expertise in using them and the expertise in just knowing how the market works and how it moves. Patience is a difficult thing for a lot of people. Most people would look at something like this and be like, I'm in right here. And especially options traders, you get in right here, the premium kill that you're going to get on any pullback here, it's going to be a little scary for you. And most of the time, you're going to end up selling your contracts back to the market maker or back to somebody, again, somebody who is a little bit more patient. So it really is just a game of back and forth here and your emotions, which gets difficult. And again, we're slowly just trying to kill these emotions just by adding some more science to the mix here, and some more patience and some more timing, ways that we can help ourselves, understand timing a little bit better. Okay, so why don't we wrap this up here a little bit, guys? You have the link here for you. You're looking for marketinflections.com. We do have a promo going right now. You can get it for half off for your first month, and then you're going to renew at $250 a month after that, so you can get it for $125 and change. Michael, no problem on the Tesla here. Metzi, I heard your story here earlier here. You took a couple $100 here into $1,500. That's good work. Patience, man, I'm telling you, is everything. I bet you've already said it here yourself. So don't get too excited over the gains. Just keep plugging away slowly here, and try not to up your contract size too much. Because you can easily blow that out, which I'm sure many of you guys have been down that road before. Okay, so again, you guys are going to get a private Twitter feed as well as emails on signals and alerts for trades that we are going to pump out, and these will include longer term trades where you might be holding them for 5 days to several months. Or they can be day trades as well. We're also going to do, time decay, writing strategies as well. We are rolling out a future service soon. You guys, I know, are asking about this constantly, so we are going to roll that out as well. These signals work on anything that freaking trades, man. We can even work this shit on an options chart, a 7-day freaking options chart. So we can do a lot with this stuff that we're going to continue to roll out and work on. Alex, myself, and the team at Sang Lucci and Market Inflections. So go ahead, hit the site, and we will see you guys in the chat room. Eventually, too, we're going to build it out in here as well. So you'll be able to just get your signal right in here, too. So this is all coming down the pipeline. For right now, we're just working these signals right now and trying to get us all some better freaking trades and more money in your pocket, man. Alex, you want to leave them with anything?
Yeah, I mean, I'll leave you guys with two things. The biggest thing that I have gotten from mastering this software is to control the time that my capital is exposed to risk. Yeah. I found that I trade so much less, and then the times that I am trading, I know that I have an edge. I'm not guessing. Any part of any trade that I ever take is truly with an edge. So that is really what helps me. And it also has helped me focus on my specific style. Like before, I would focus on something, and that type of trade, either it's selling vol or looking for breakouts, it's got its own season. You know, it might work for a few months, even a year, but then that'll dry up, and then I wouldn't have anything. You know what I mean? I have nothing there to keep my account going. So
Right.
with this technology, we can really scan the entirety of any traded market, and we don't have to spend a lot of time flipping through charts or doing all this stuff. You know, it's signal, it's pure signal, and that's basically where our edge is. I want to leave you guys with one more idea. I know might sound kind of crazy, but I was looking at today Williams-Sonoma, WSM.
WSM. Here we go.
Weekly chart. I've been watching kind of any insider buying and any gurus trying to buy this. This thing has been, you know, clobbered by the death by Amazon, and you know, these guys own the One Elm or whatever it's called, Pottery
Yep.
Barn. It
Yep.
kind of seems like stuff that isn't necessarily, to me, going to be sold on Amazon. I mean, these are like $3,000 couches, right? I mean, this isn't stuff that you can just pick off the internet. So I don't know. They seem to be fairly profitable and just due for a mean reversion. And so a lot of these beaten up retail guys, I've been looking for entry points for the upside. And again, this is, you know, the long only side of what I do, and this could be a good idea. So this is just a different example of looking at a contextual trade. You know, last year retail was the worst sector, and is it going to be the worst sector this year? We don't know, but usually it's not. The previous year, pharmaceuticals was the worst sector. Right now it's the leading sector.
Right.
So this is kind of how experience has trained me to look for mean reversion type trades.
Right.
All right, man.
Cool. Last thing I want to leave you with too is that we got a couple people here. Michael has asked us about a combo deal, Wall Street Jesus and market inflections. You know, yes, absolutely, we're going to be able to roll that. We're gonna work on that particular package, so you'll get both of them together. You know, and we'll be able to roll that out within a week or so. So if you guys want to wait for that, you know, go ahead. Another thing I'm getting asked about a lot is the actual software. Okay, and I'm going to let Alex speak to that for a little bit. But if you go on the website, you know, you're going to see a tab here where we actually can go ahead and sell you the software. If you really want to get intricate with these signals and really want to understand the science behind them and adapt the strategy for yourself and just kind of do your own thing here, possibly just purchasing the software is a good road for you, especially if you're already kind of advanced as a trader. You're just looking for a little bit, you know, you're just looking for that next step, that next little thing to add to your, as far as tools to your trading repertoire. The software could be a place that you want to go. Alex, you want to give them a quick synopsis on the software there?
Yeah, just so for the software, it was originally built and designed and really marketed just towards professionals, institutional players. A lot of the tools within the software were custom designed for specific funds or hedge funds that have now basically been reaccumulated back to the suite. The terms are, you know, it's not really a retail-oriented software, but we do have the ability for you guys to buy it. It also comes with hosting on a cloud server, so you don't need to have a monster computer for it to run quickly, even though it does require a fairly large computer brain. Like I'm running like 16 core to get it, you know, really up to where I could utilize it in a way that's the most beneficial. Additionally, it does come with training. I'm basically the lead technology support for all the users on the Bloomberg terminal and on the TradeStation. So it is available on both.
Okay, so guys, go ahead and inquire and let us know if you're interested in either the software or just the signals. And remember, again, for most of you guys, we do the shit for you, you know? Like, we're here to do it for you. And that's what we've done with the Wall Street Jesus brand as well, to give you curated options, aggressive options plays in the market. You know, we did that for you. Now we're bringing you these signals. We got a lot more coming out there for you guys as well. Advanced stuff that you guys, you know, can really use to add some edge here to your trading. All right. So hopefully we'll see you in the chat room. I'll see you on the private Twitter feed. And have a great night, guys, and happy trading out there.